Hey, welcome back to YT Finance, and today we are doing something slightly different because all three of the companies and stocks we're talking about today actually came from subscriber suggestions. So if you want me to report on stock, remember to comment your thoughts down below, and I may or may not report on the stock. I am not going to be overly friendly with these stocks, I am going to be brutally honest. Now, whether or not you agree with my opinions on these stocks is up to you, and it doesn't really matter to me because my portfolio speaks for itself. But I just would like to inform you about my opinions on these stocks that some of you all commented. And although I don't anticipate this video to get many views, I just want to give my honest opinions about some of the stocks that you guys have prescribed for me to report on. So without further ado, we're going to be talking about Castor Maritime, Atossa Therapeutics, and Aqua Metal. So stay tuned. We're going to begin by talking about Castor Maritime. And if you didn't know, this is a Cyprus-based shipping company named Castor Maritime, which had very strong fourth quarter results and even fantastic 2022 guidance. The ticker symbol for this stock is CTRM. It currently trades for around $1.65, and I couldn't find any reputable analysts that cover this stock, so we do not have a low, average, or high-end price target for the stock. However, I did find some less than reputable sources that say that this stock is worth anywhere between $2 and $5 per share. So like I said earlier, this is a Cyprus-based shipping company that has done very well in the fourth quarter. Their revenues came in for the full year at around $132 million. Their market cap is around $156 million, and their net income is actually positive, and they brought in around $52 million, which is actually pretty good. They had very impressive EBITDA, which is earnings before interest, tax, depreciation, and amortization, which came in at around $36.1 million, on top of operating cash flow of around $32.3 million. So overall, these are actually pretty impressive statistics from this particular company. Unfortunately, the author says that the tanker market has remained under pressure with no visible signs of near-term improvement. The author also goes on to say that in addition to this, the first half of 2022 is not supposed to be as lucrative as the last quarter of 2021, and quarter four results of 2021 is actually what really ignited this company's overall financial performance. There are many other stocks and competitors to this company that are much better suited depending on what type of investor you are, and you see those down here. We have ticker symbol SBLK, GOGL, EGLE, GNK, and a plethora of others like GLBS and OP. However, I was given the opportunity just to report on this particular company, and that's exactly what we're going to do. Now that we've gone over some of the negative news about this company, I want to go over the positives about this company. And the positive is that the company's net asset value, also known as the NAV, has increased even further, and it's now approaching around $5.50 if we compare that per common stock of share. So just from an asset basis, this company is actually undervalued right now, trading below $2 per share. So at minimum, the assets that this company possesses dictates that the net asset value per share should be around $5.20 to around $5.49. And you can see how we calculated the Castor Maritime net asset value right here. So from a value standpoint, technically this is not a bad stock to own, but I do want to add that this stock is hyper risky right now. This is no blue chip company, and the risk is definitely going to have to be yours if you decide to invest in this company. However, it is from a NAV basis considered undervalued. Even despite a 20% rally recently off of their quarter four results, which came in at the beginning of February, the stock and company still trades at around a 75% discount to what the stock should actually be worth. Some investors are also scared of share dilution from management. However, the author of this article says that he doesn't anticipate that management will sell any additional shares into the open market given their expectations for the shipping market after quarter two. So overall, this is not a bad company, and depending on what type of investor you are, this may be a good trading opportunity for you. But for me personally, the stock is too risky, and to me, I will not have any money allocated to this specific company, but I do see why other investors could end up investing in this company just purely based on the net asset value per share of this company. Now I want to move on to Atossa Therapeutics, ticker symbol ATOS. Atossa Therapeutics currently trades for around $1.27. The low end analyst price target for the next 12 months is $4 per share. The average price consensus among professionals is $6.38, and the high-end price prediction in the next 12 months, according to analysts, is $8.75. So from the stock's current price, we could see fantastic upside for the stock, but I personally don't own this company, and I'll tell you why later on. Right now, 2 analysts cover the stock, and both of them actually say to buy this stock. This particular company, it's a biopharma company that mainly focuses on developing a treatment or cure for cancer, and a plethora of other companies are already doing this, so the chance of Atossa Therapeutics actually coming out with the treatment or the cure for cancer is very, very slim compared to the other mega cap companies that are also working on treatments or cures for cancer. I also want to add another reason why I personally am not invested in this company is that they have a very large net loss and basically no revenues, which is why I do not feel comfortable investing into this particular company. However, if you're just going off of these 2 analysts, they are very bullish on this company, and I can always be wrong. But I do want to let you know that this is a very risky investment if you decide to invest. Investors right now are waiting for an earnings report to come out, which is currently scheduled, according to this article, to come out between the end of March and the beginning of April. Analysts are currently projecting that the company's earnings per share, also known as EPS, is going to come in at around a 5-cent loss, which is expected to increase to a 6-cent loss, and for the whole fiscal year, it's supposed to come in at around a 19-cent loss per share, and this is supposed to increase again for the full year of 2022, which is supposed to come in at a negative 22 cents per share. So it's not like they are increasing or improving on their EPS too much, and that's why I am not very bullish on this company. Another thing is that I won't bore you with all the indicators that we looked at, but according to this article, the short-term indicators denote that the stock is a 50% sell right now on average for the short term. However, for the medium and long term, it's a 100% sell. Now again, the article and the author of this article can be wrong, as well as myself, but I just don't see the future trajectory of this stock or company right now. I would need them to really scale their earnings per share and their revenues and lower their net losses before I can actually have an adequate price target for this particular company. And that is why I am not personally invested into Atossa Therapeutics. However, this company may be good for your portfolio, or maybe you're going to perform different analysis than me, or just have a different perspective, because possibly we have different objectives and goals that we would like to meet in our particular portfolio. Because again, according to these 2 analysts, they are very bullish on the company, and you could easily 2x your money or even 5x your money in some cases. Lastly, we're going to look at Aqua Metals, and I've seen this pop up in my feed multiple times, but let's see what analysts think of the company as well as myself. Aqua Metals, ticker symbol AQMS, currently trades for around $1 per share, while 2 analysts cover this company, and the low-end and high-end price targets for these analysts actually come in at $7 to $8. So maybe you could 7x or even 8x your money. However, let's see what the author and I have to say about the stock, because according to these 2 analysts, Aqua Metal's AQMS stock has recently absolutely plummeted by around 82%, and that is not a good sign. If you didn't know, Aqua Metals is a company that can actually recycle lead and lead acid batteries, which is fantastic news. However, electronics and even electric vehicles are now using lithium batteries, so why not recycle both lead batteries as well as lithium batteries? This would diversify the revenue sources and even double potentially their amount of income that they're making. The only problem here is that Aqua Metals has not been telling us how effective this has been. They have not been telling us about their investments in such a collection network at all. Rather, the article says that instead they are just telling us about how excellent their lead battery recycling is. So let's actually see how good they are at recycling lead acid batteries. Because if they are not efficient in lead acid batteries, even if they did diversify and chose to further diversify into lithium batteries and recycling lithium batteries, who's to say this would be even good? I have a snippet from the article back in August of 2021 where the company's management said that we did complete our 3rd generation aqualyzer, which says basically that they have a new 3rd generation aqualyzer where they have gotten much more efficient at recycling lead acid batteries. They made around 35,000 ingots and up to 1,296 kilograms per day. Now, what the author as well as myself find very strange about this is that when you're talking about lead, we really don't measure lead in kilograms. Just like how we measure gold in ounces, you really don't use kg when talking about lead. It's much easier to talk about lead and steel in tons. So although 1,296 kilograms sounds like a lot, it's really not, because that's only around 1.2 or 1.3 tons. The reason why this is bad is because lead currently goes for around $2,200 a ton at present value. So all of this hype saying that they made 35,000 ingots and up to 1,296 kilograms per day, that is only around $2,200 at current prices. So to me, this is management kind of misleading their investors that really don't know a lot about what they're actually supposed to be making, let alone the current value of lead per ton. This is why in the long term, I am not invested in the stock, not even for the short term. However, I will always keep an open mind if this company actually starts to scale very impressively, they start scaling their revenues, they have better net income, earnings per share. I'm always open to change my mind on any of these companies. However, out of all three of these companies, I would say comparatively, Castor Maritime has the best overall value, specifically because of their net asset value per share. But with that being said, I would love to hear your thoughts. Comment down below if you own any of these companies and what your thoughts are on them. Subscribe if you are new, like this video right now, and I'll see you in the next YT video.